Welcome back to the channel, guys. This is Jason, certified financial planner and host of Fighting Words Financial. In this video, I'm going to talk about NIO's landmark battery as a service model, recently launched, and by the end of the video, I think you're going to understand why this is a much bigger announcement than anyone realizes about the future of the electric vehicle market in China. But before I get started, because this is the internet, I do need to say that this is not financial advice aimed at any individual or group. Please don't accept this as instruction to buy, sell, or hold any securities. Do your own due diligence, do your own research, and make your own decisions. Now, as I've discussed before, guys, I'm not unbiased. I do want to say right now that I'm completely biased because I have a position in this company, but I do want to, in this video, try to present, two sides. I want to present some positives and I want to present some negatives, all right? So on August 20th, NIO unveiled a battery as a service model, or BaaS subscription model. And as a dual announcement, they announced the establishment of something called a battery asset company. Now let's talk about the battery swap service first, or battery as a service first. And we'll talk about why the establishment of a separate battery asset company may be a very smart idea indeed, and may be the most important announcement that came out of all of this. Now, NIO announced on August 20th that the first vehicle under the battery as a service model had already completed the process of license plate registration, insurance purchasing, and auto financing. Meaning this isn't an announcement of an idea or a technology or a dream that's supposed to be revealed in the future. It's kind of like another company, like I won't mention in this video, is fond of talking about. It's a service that is now available to all customers who wish to purchase a NIO vehicle. This is a big deal, folks, for a number of reasons. Now, it might just be a big deal for NIO as it relates to its ability to compete in China. We, in the West, may never see this business model exported abroad, and we may not see this innovative business model as a permanent feature of NIO Motors. As one subscriber put it in the comments of an earlier video that I did, the idea of battery swap is not future-proof, but it could be a bigger strategy and bigger success than we can imagine at this point. And as we go along, I think you're going to start to understand what I mean. Now, there are some very obvious financial benefits to the consumer that many others that follow NIO are excited about, but I'm actually not going to dwell too long on those because there's already a lot of videos out there on the consumer cost angle, and there's actually some far more important things to talk about. But let's go through those financial benefits real quick. The financial benefits come in the form of separating the cost from the vehicle from the power source. Battery as a service users enjoy a roughly $10,000 discount off the car price. You're buying the car separately than you're buying the battery service. The battery subscription starts at around $142 per month and represents a lower point of entry into the premium electric vehicle market for NIO consumers, and lower operating costs for vehicles in that same class when they're compared to like gas vehicles. A big deal for customers when it comes to battery as a service model is that it's sold separately from the vehicle, and then it doesn't show up on the receipt or the bill of sale. This makes some of NIO's vehicles eligible for a generous subsidy offered by the Chinese government that is normally denied to luxury vehicles. I don't think that it was an accident that only vehicles priced below roughly $42,400 qualify for the subsidy, especially when Tesla's China-made Model 3 sedan is priced at about $45,800. The subsidy reduces the purchase price of an electric vehicle made by NIO in China by about $3,500 and makes NIO's entry-level ES6 a heck of a lot more attractive. Now, if you watch my previous video on NIO, I talked briefly about how the market NIO operates in is significantly different than markets in the United States and Europe. As of right now, NIO's market is concentrated along the eastern coastal cities of China and along one highway that goes into the interior of China. Before this announcement, NIO already had about 143 battery swap stations across 64 cities in China in a network that connects Shanghai, Beijing, and the Pearl River Delta, where Shenzhen and Hong Kong are located. The Pearl River Delta is the largest urban area in the world with 57 million or so inhabitants, and the eastern coast of China may be the most densely populated coast on the entire planet. With this battery swapping network expanding rapidly, it will soon be possible to travel the entire vast and densely populated industrial eastern coast of China in an electric vehicle. While the population density provides huge interconnected markets for NIO, it also presents some unique challenges for the company. Many NIO car owners and many prospective owners, even people who are quite well-to-do, live in apartment blocks. Rather few people own land or single-family homes, and most have limited or no access to home charging for now. For now, there is no guarantee that future middle class and luxury housing will not universally involve built-in charging locations. While I haven't been able to find anything online related to a trend like this, it wouldn't surprise me if this trend had already started. One of the downsides to investing in this battery swap network and charging network is that there may be enormous cost in developing the infrastructure and maintaining these stations. We don't know how much these stations actually cost NIO to develop, and we don't know what it costs to maintain one, because the financial records of Chinese companies are opaque to a degree. But one thing we do know about these battery swap stations is that NIO is not sinking a lot of money into relatively illiquid real estate and permanent facilities. These battery swapping stations are temporary structures. They are designed to be moved from location to location if necessary. They can be assembled on site very quickly, and a new location can be up and running in a couple of days if the state-owned power utility does that hookup rather quickly. If NIO sees that a particular location isn't being used enough, they can pack it up and drop it down in another parking lot or another location where they expect utilization to be better. If a location is being overutilized, NIO can just simply drop another swap station right next to the one that was already there, doubling their capacity, providing that there's space available. While that could lead to some confusion as to where you might be able to swap your batteries or charge your batteries if you own a NIO vehicle without battery as a service, the onboard virtual assistant AI native to NIO vehicles, Nomi, will direct you to the nearest facility just by asking. Now, battery swapping has already been around for a while, and it isn't even all that new to NIO. NIO is said to have completed 800,000 battery swaps already for its existing consumers, usually in under 5 minutes. The idea of battery swapping isn't new at all, and it's actually been tried before. You might not have ever heard of a company called Better Place. It was a venture capital-backed international company that developed and sold battery charging and battery switching services for electric cars. It was based in Palo Alto, California, but the bulk of its planning and operations were managed from Israel. The company started, I believe, somewhere around 2006 and ended up crumbling in about 2013. It didn't last too long, but it established battery swapping networks primarily in Denmark and Israel. It failed for a variety of reasons. Some of those being that it was simply an idea that was ahead of its time. Market penetration and interest in the battery electric vehicle just wasn't where it is today. Better Place also had a business model where customers entered into subscriptions. Curiously, customers purchased monthly driving distance, similar to the prepaid mobile phone industry from which customers contract for minutes of airtime. Just like with NIO, Better Place envisioned the initial cost of an electric vehicle being subsidized by the ongoing revenue contract. Better Place's management had a goal of enabling electric cars to sell for somewhere around $5,000 less than the price of an average gasoline car sold in the United States. They believed that unless this happened, the impact of battery electric vehicles would be minimal. The Better Place approach was to enable manufacturing and sales of different types of electric cars separately from their standardized batteries. Sounds familiar? In the same way that gasoline vehicles are sold separately from their fuel, Better Place envisioned a world where electric vehicles were sold in the same way. Gasoline is not purchased up front. It's bought a few times a month when the fuel tank needs filling. Similarly, Better Place monthly payments would cover electric fuel costs, including the battery, the daily charging, battery swaps. Better Place's plan was to allow customers to pay incrementally for battery costs, including electric power, battery life, battery degradation, warranty problems and maintenance, capital costs, quality, technology advancement, and anything else related to the battery. The per distance fees would cover battery pack leasing, charging, and swap infrastructure, purchasing sustainable electricity, profits, and the cost of investor capital. All battery problems would be handled by Better Place, which would then bundle the costs and bill the customers monthly for providing all of that infrastructure. Look, it was an incredible business idea, but simply put, it was launched before its time and not in the ideal location for success. But the biggest factor that really killed Better Place was that they were not able to convince any electric automakers to standardize battery swapping capabilities, and Better Place never found the industry buy-in that they would need for success. NIO's business model innovation when it comes to battery as a service really isn't that much different than Better Place, but they are in a much different place when it comes to the potential for electric vehicle industry buy-in. Now, there are economic tailwinds that NIO seems to have caught, and it's my firm belief that the dual announcement of the establishment of NIO's new subsidiary, the Wuhan Weining Battery Asset Company, will have far greater implications for the future of the entire Chinese electric vehicle market than we can predict at this time. Why would I say that, you ask? One of the biggest concerns that people who follow this company have is the fact that NIO does not make its own vehicles. but instead contracts out the manufacturing to state-owned automaker JAC Motors. Now, I have grave concerns regarding the ability of this company to vertically integrate or for any state-owned enterprise to compete on a level playing field with the private sector. But China is not truly a level playing field. NIO's chief financial officer was once quoted on a call as saying that joint state-private sector manufacturing efforts like this are endorsed and perceived as innovative manufacturing models in China, especially by the government, which is currently pushing for consolidation. Now let's talk about that, pushing for consolidation. It is a deep desire of the Chinese government to be a leader in electric vehicle and autonomous driving technology, and they formed many interlocking strategic partnerships in order to become that leader. All right, folks, now bear with me because this next part of the video is entirely speculative, but let's take a look at some of the partnerships the state-owned automaker has made on their own or through NIO. JAC manufactures NIO's vehicles for them and has a strategic partnership to develop autonomous driving technology. JAC Motors also has a strategic partnership with GreenTech Automotive in the United States. Volkswagen and JAC also have a strategic partnership to establish an R&D center in China with a focus on developing electric vehicles, connectivity, and autonomous driving technology, plus an industry platform for battery electric vehicles. Volkswagen's partnership and JAC's partnership is so deep that Volkswagen has taken a large equity stake in JAC's parent company. JAC also has a strategic agreement with Ideanomics Inc. The agreement focuses on developing a Chinese EV taxi fleet, EV buses, heavy commercial trucks, municipal EV trucks such as fire trucks and light commercial vehicles, and electric police and law enforcement passenger vehicles. Now, NIO has a relationship with a Chinese battery maker named Contemporary Amperex Technology through the new battery asset company, of which Amperex owns 25%. You know who else has a deep relationship with Amperex Technology? Tesla. It's been reported that Tesla's new battery technology, the million-mile battery set to be unveiled this fall, was co-developed by Amperex Technology. The company signed a 2-year deal to supply the batteries for China's Tesla Model 3 cars all the way back in February of 2020. It has deals to supply Volkswagen, who is also in a strategic partnership with JAC. Like I said before, this is all speculative, but it seems likely at this point that JAC and NIO are developing what Better Place could not, and what ultimately caused Better Place to fail. The web of interconnectedness in the Chinese EV industry and the strategic partnerships that JAC and NIO have developed make it fairly likely that NIO's announcement of battery as a service and the battery asset company is just the beginning. NIO, Tesla, Volkswagen, and JAC will all be sourcing technology and production capacity for batteries from the same places in China. What I believe is that we are probably going to see the emergence of a new manufacturing standard developed from NIO's battery as a service stations if they are successful in driving sales in what is probably the largest EV market on the planet. Perhaps one day soon, all newly manufactured vehicles in the Chinese market will have, if not the same battery, the same universal battery swapping technology. Perhaps NIO's battery as a service and swapping stations won't be just serving NIO vehicles in the future. Rather, EV makers will manufacture their cars to NIO's battery swapping standards in order to gain access to the NIO charging and swapping network, and also giving other manufacturers the ability to cut the expense of a battery out of their cars so that consumers can have a lower point of entry. I think that it's fairly obvious at this point that NIO, through its partnerships with JAC and Amperex, is positioning itself to push an electric vehicle battery technology standard onto the entire EV industry. One that has the ability to accommodate Tesla, NIO, and anyone else who decides to manufacture EVs in China. No one knows exactly what the plans are for the battery asset company, but if manufacturing standardization isn't a goal of the battery asset company, I would be absolutely stunned. I think it's entirely possible that 20 years from now, NIO's 25% stake in the Wuhan Weinang battery asset company could actually be driving more profits for NIO than the sale of its own vehicles. In other words, it could be a bigger deal than NIO itself. Think about what this could mean for NIO. If NIO is able to successfully set manufacturing standards for battery swapping technology, and they're able to offer battery as a service, as a business model to anyone with an ambition to manufacture electric vehicles, those companies wouldn't have the need to take the risk and make the capital investment of building their own factories and developing their own battery technology. The sky is the limit here in this case. Think about it. Who is to say that you couldn't buy a NIO and sign up for battery as a service? And if you decided you didn't want your NIO anymore, you could sell that car and take your existing battery service contract and go out and buy another electric vehicle which has access to the same battery technology and swapping stations. And whatever battery service package you had before works with the new vehicle, because all vehicles now have standardized battery swapping technology. All right, folks, so the bottom line is, was this announcement a big deal? I really think that it was. I think it could be, and not just for the future of NIO. I think that NIO's true ambition with the establishment of the battery asset company is to create battery as a service separately from NIO itself and to be able to offer it to other manufacturers, thereby setting a manufacturing standard. Remember, China doesn't want one company to become a leader in EV technology and autonomous driving. They want to dominate the entire industry, and they desire to have some degree of consolidation at this point. I think that this is all part of the overarching strategy for China to dominate electric vehicles and autonomous driving. How far are they behind in terms of artificial intelligence and Tesla? I don't really know. If some of you guys know, please let me know in the comments down below. All right. So, okay, guys, those are just my thoughts. I would appreciate yours. Comment below and let me know if you think I'm really far off the mark regarding the latest news from NIO or regarding the importance of the battery asset company. I'll see you next time.